Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update. And this is your weekend version for Friday, the 22nd of March, 2018. So, trade war heaven. And finally, the metals, especially the gold and silver, grabbed onto something that they're believing in, especially the gold market. Now, gold was at a point this week where had it closed under 1314.50, 1314.50, I would have activated another leg to the downside as a technician, as a chart technician. It didn't do it. In other words, couldn't get a second close under that level. That was key. The market has reversed course from there now, $45 almost. Quite a move back to the upside. And what's really appears to be going on is traders are buying the Japanese yen and they've turned to the gold as safe havens. They've even been buying the bonds and notes, stopping that market from going anywhere. Now it's going to get interesting in the bonds and notes because we've had so much Chinese buying. What if they decide to no longer buy? Nobody's talking about if we get into a trade war, what if they start dumping? What does that do to the interest rate sector? You got to think it all through. When I look at a monthly chart of gold, I don't think you could argue that we've been basically going sideways since 2016. I can go back here almost to 2015, but I'm more comfortable saying in this band. If this market can start breaking through the 1365.70 level and not get thrown back, that put it over the 100-month moving average in the upper Bollinger Band, this could all become a powerful base to carry the market, as I've said before, maybe to the 1400 plus zone. So I'm looking at that. When I go to a weekly area chart of just closes, you're back into an upthrust here. The market held its key areas. Now remember, this is the April gold that it would be looking at. That was the lead contract. I'm already trading the June, so when I'm talking 1314.50, it bases the June contract. And this market still pointing an upthrust with bias up. When you come to this area and just looking at the chart, you can see the consolidation pattern that's going on. And admittedly, it's swinging here from roughly the 1360s down to the 1310 area, back and forth, about a $50 range. And suddenly, with this week's action, you've put in the pattern of higher lows, higher highs. Because this is an outside week up, I don't want to see this week's low of 1306.60 taken out in the next 2 weeks. If it is, I will label this as a bull trap and start targeting numbers down here. As long as it doesn't happen in that time frame, I look to see where the moving averages are, and the battleground was crystal clear. It was the 18-week moving average of closes. It held. And now the market's moving up. The 100-week is under the market and the 200, so you don't have that as resistance. If anything, on the weekly chart, you've got what's called a bullish setup. The shortest term average is over the medium term, medium over the longer term, this being the 200-day in the dark gray. So where's the resistance points or theoretical ones? I'm going to call it the upper Bollinger Band. And even though this is a weekly chart, if you go back and you look at it, you will see that the Bollinger Bands work really neat, still on it. I think they're better on the daily, but they're really nice on this chart too. And as I'm looking at it, if the market wants to extend, what did I say? You've got to get up and over those 1360 areas. 1375.50 right now is the upside resistance. When we come to the momentum turned back up. On weekly charts, I do not view them as overbought, oversold. I just look at the momentum itself and leave it at that. I go to the daily charts for the other. I'm calling momentum turned up, bias up, trend up. This market, if it continues to run, possibly it gets to the upper Bollinger Band. When we come to GLD, the gold on the ETF, you can see that this week's low is 123.96, which was above this week's back here of 123.58. Therefore, I should not have that arrow pointing down. That was my mistake. I should have it pointing up. On the weekly chart, this is bullish. You've got higher lows, higher highs, putting in target the 130.10 area, and momentum is pointing up. GDX, I did this one right. Got higher lows, higher highs, also an outside week up. You don't want to see this week's low taken out over the next 2 weeks. As long as that doesn't occur, first resistance number looks to me like a challenge of 22.58 right around the corner. Momentum trying to turn up here as well. On the silver, the weekly chart has not turned up. On the silver, you still have lower highs, lower lows. You're trying to come up. If you look at last week's range, yeah, I want to do that right. 1650, 650 to 1618.50. We didn't take out last week's high. So all we had was we came down and we had an up move, but we didn't take anything out of importance. Resistance still here at the 1661 level. You'd have to take out 1681 to reverse the trend on a weekly chart. In the copper, well, copper's Dr. Doom right now. And why do I say that? Copper, you know, we think of copper in the trade as being the metal that tells us how the economies of the world are doing. And you're talking trade wars. In a trade war, we're going to tell China we want to tax this. They're going to say they're not going to import that. And while everybody will say, oh, we want that, we'll pick up the U.S. market share, none of their economies are as big as ours. So it's the two Goliaths going at each other, and copper in the process of that is not a winner. And as you can see, it's now coming down back to its lower Bollinger Band. The trend is down, momentum down. This market's got problems, as does the platinum market. Lower highs, lower lows, momentum down. Resistance back from 961.70 to 977.80, the 100-day average in the 18. Nothing friendly on that chart. Palladium, nothing friendly. Lower highs, lower lows, momentum still pointing down. If it gets another leg to the downside, potential lower Bollinger Band. Let's assume it turns up and gets through last week's high, which was 995.35. Well, in that case, you could get a position where you get higher lows and a higher high. But you'd have to close over 1033.50 to get bullish again. So even if that occurred, while the swing line would turn up, you have a lot of resistance for $60, up to $60 above you. In the dollar index, the weekly chart looks way worse than the daily chart. Lower highs, lower lows, momentum down, bias down, maybe the 87.65 level. And this makes sense if you think about it. The U.S. and China both have a lot to lose. So you put it all together, you got a mess on your hands with all this. And I think it's going to get worse before it gets better. You've got John Bolton now in there, another hawk. I mean, the president's now replaced his cabinet with mostly the people he likes as hawks. And that doesn't make it easier. He doesn't have somebody whispering in the ear, we shouldn't do this. Rex Tillerson's gone. A lot of people gone. And I can't speak for China, but they're not going to be pushed around either. So it's going to be a tit for tat for a while. You've got 2 weeks before you know the tariffs as they come in. Markets do anticipation. I don't think the markets are going to think, oh, this is not going to turn into anything. With that, I want to talk about my research. I put my research out 2 ways for you. You can get just the commentary without any of the trade recommendations. You can go to our website. You can sign up for it under the word recommendations and research. And how that works is you can either pay $25 a month or $240 for a year. I think you'll find it well worth it. It comes out twice a day. I do it Sunday night, then twice a day minimum through Monday through Thursday. You get the special reports as I put out and so on, and then another report on Friday morning. If you want it with the trade recommendations, then that's more money. That runs about $60 a month. You get my oral updates. You get the morning videos where I'm telling you buy here, sell there, other things to do with it. Same commentary, but trade recommendations. You decide. But I think you'll find for $240 a year, it's an awful lot of information that we put in your hand. Again, this is how you get it. Why not take advantage of it? And I'm Ira Epstein.